It's time now for a look at today's business news. And for that, let's stick with our top story today, that election in the United Kingdom. And let's check in on how the markets are responding to that with Cole Stangler, our business editor. Cole.
Hey, Nadia. That's right. To put it simply, investors very happy with last night's results. Now, the pound was soaring after exit polls were published late last night, hitting levels not seen in quite some time. Overall, investors feeling reassured about the Conservatives' very comfortable majority in Parliament. Sense is that the party's margin of victory essentially eliminates the possibility of a no-deal exit from the European Union, an outcome long feared by business. Many executives and shareholders also relieved to see Labour's broadly redistributive economic platform off the table. Now, the pound sterling was up as high as 2.7% against the US dollar. That was its highest level since May of last year. It's now trading slightly down at around $1.34, still with gains, though. It also hit a more than 3-year high against the euro, now trading at around €1.20. Major European indices also posting gains today. Upward movement, though, somewhat limited earlier on the FTSE in London. It's because the higher pound actually hurts export-focused companies in the UK, which the FTSE features many. It's now still trending upward, though, up 1.8%. The CAC 40 posting gains of 1.2%. A similar picture over on the DAX in Frankfurt. Asian markets also finishing off the week in positive territory. The Nikkei up more than 2.5%. Solid gains on the Hang Seng, the Shanghai Composite, and the Kospi in Seoul as well. All of them also boosted by apparent progress in US-China trade talks. Now, earlier in the day, we spoke with analyst Michael Hewson in London to get some more insight on today's market movements in Europe. Take a listen.
Yeah, well, I think there's widespread relief that we've had a fairly comprehensive outcome. If you look at the value of the pound in the wake of the exit poll last night, there was a big surge there. A majority for the Conservative Party was priced in of around about 20 to 40 seats. No one, I think, reasonably expected the Conservative Party to get a near 80-seat majority. And I think in some respects that actually makes things that much easier. First and foremost, we've seen big gains in European markets because it really outlines a very clear direction for UK Brexit policy after the 3 years of delay and gridlock. More importantly, what it does is it makes a no-deal Brexit much less likely. That's why you've seen the DAX move higher. That's why you've seen the CAC 40 move higher. Both of those economies are very closely geared to the UK economy. And also the FTSE 100 and the FTSE 250. They've also surged quite strongly as the prospect of a Labour government has been pushed firmly to one side. You've got a nationalisation discount coming off that's prompting these indexes to surge quite strongly.
Next up, the US and China are reportedly nearing an agreement to avoid a further hike in tariffs on Sunday. Countries have been locked in a trade dispute for more than a year, trading tariffs on hundreds of billions of dollars of goods. On Thursday, U.S. President Donald Trump suggested a so-called Phase 1 deal was imminent. Today, though, Chinese officials have declined to confirm that's the case. In the meantime, uncertainty continues, and it's not such a good thing for many American businesses. Kamil Nedeleg takes a closer look at how they've been affected by the trade war.
This San Diego company specializes in Bluetooth earbuds, and customers can't get enough. They're the second most sold earbuds in the world. Designed in the United States, the company's star product is made thousands of miles away in China.
So we're very dependent on trade with China, and I'll tell you why. It's simply scale, but we need 50,000 a day. And when you need 50,000 a day, there's really only one place that has the sophisticated infrastructure to handle that type of scale, and that's China.
But the trade war between the United States and China has dragged on since March 2018, forcing Kramer to make a difficult choice. He's decided to let the extra cost eat into his profit margin rather than pass on the cost to his clients, even if it means losing several millions of dollars. The dispute between the world's two largest economies has disrupted the global trading system, and the damage to Kramer's company has already been done.
I think that's the hardest part about uncertainty is just that, it's uncertain. So we can't make long-term or even mid-term decisions about where we want to take the business. We have to make really short-term decisions almost week by week by week, because that's how quickly it's changing.
Trade tensions are expected to cost the global economy $700 billion by next year. And despite the U.S. president pleading to protect employment, a study conducted for the Port of Los Angeles claims that some 1.5 million American jobs are already under threat.
And finally, gamers have some good news to end the week. That's because Microsoft has unveiled the name and design of its new video game console. It's called the Xbox Series X. The company says it'll be 4 times more powerful than the current Xbox One. The unveiling comes as rival Sony prepares to release its new PlayStation 5. Both are expected to be available for sale around the holidays next year, though Nadia, one very important detail still missing at this stage. Microsoft hasn't yet announced the price for that new Xbox.
Perhaps not on my Christmas list then, Cole.
I don't think it'll be on mine either.
Not on our salaries, maybe. Thank you very much. Cole Stangler with the business update.